Good morning, everyone. Today, we will discuss about our first subject, that is financial accounting and reporting, commonly known as FA. Many of you have done accounting in your plus 2 level as well as graduation level. Financial accounting is all about classifying, recording, summarizing financial data. Now, what do you record in financial accounting? You record business activities like purchase, sale, and you find out what is the profit that we have earned in these business transactions. So financial accounting is basically recording, classifying, summarizing various business activities commonly known as transactions and ascertaining the net profit earned from such activity. So when we see our plus 2 knowledge, right, we have a basic accounting knowledge. In that we know financial accounting deals with recording of transactions, classifying, summarizing, and calculating the net profit of the organization through such activity. We have also learned financial accounting basically also tells us about the financial position of the entity, like as to how much assets that entity has and how much liabilities, the obligations the entity has to pay. So we can also calculate the net worth as to this much assets I have and this much liabilities I have to pay. So asset minus liability will give me the net worth of that particular organization. I have an assets of say around about 20 lakh, but there is a loan through which I have acquired that asset. So maybe that loan is worth 8 lakhs. So out of 20 lakh asset, 8 lakh is my liability. So my net worth is 12 lakh. In future when I repay that loan, so maybe my loan comes down to 2 lakh. So my net worth, earlier it was 20 minus 8, 12 lakh. Now it will be 20 minus 2, 18 lakh. So you can see that the net worth is changing over a period of time. So this financial accounting which we have done in our plus 2 level, it records the business activities known as transactions, classify into asset, liability, expense, income, summarizing and ascertaining the net profit of the organization. We have also learned preparation of balance sheet, that is financial position, net worth calculation. Now the point is, why would you do so? What is the requirement of recording these business activities? Basically I need to make it accountable. Like suppose I'm working in so and so company and I'm getting a salary income of say 1 lakh. Now what will I do with that money? I will spend it for my households. Some part I will spend it for my entertainment. Some part I will save for my future. Some part I will save for my children's education and so on. So this is what I am earning and this is what I have allocated. So when I am keeping a note of it, this is accounting. This much I have earned and this much I have spent it. This is my savings. This is I have kept my for children's education. This is accounting. Like business buys goods from various suppliers, sell goods to many customers. How much total goods I have bought, right? How much still I have to pay to my vendors? How much quantity of goods I have sold? How much is left in my godown? How much I owe from my customers? What is my expense? How much salary I am paying? So I am accounting all this, I am keeping a note of this. This is accounting. So financial accounting, which I have learned in my graduation level, plus 2 level, simply it's recording of business related transactions. Now I'm very specific, business related. I'll come to it. So it's recording of business related transactions, classifying, summarizing, ascertaining net profit, ascertaining net worth. Why I'm doing all this? What is the reason behind doing this? Basically, there are so many persons who are associated with us. We need to satisfy their informational needs. Why would someone be interested with my profit? What you have to do with my profit? It is my business. I am putting up my labor. Why would you be interested in knowing my profit? Because you are government. You want income tax. That is why you are interested in knowing my performance. You being a creditor, why would you be interested? Why would you be interested in knowing my performance? The creditor would check whether the business is having sufficient funds to repay them or not. Why would the lender be interested in my financials? The lender is interested in my financial because he needs interest. He needs coverage. He needs to satisfy whether the company is earning sufficient profits to pay him interest or not. Whether his principal is secured or not. So there are so many informational needs of all different types of persons who are associated with us. Once I calculate these figures, I have to communicate to them, and accordingly they will decide whether they want to continue their business relationship or not. So this financial accounting part, I have done it. Right? It is simply recording of business transaction, classifying, summarizing, ascertaining net profit, financial position, and whatever I have calculated, whatever I have prepared, I will give it to the users so that they can satisfy their informational needs. And accordingly, they can decide whether they want to continue their business relationship with us or not. Now you might have seen when you do financial accounting, you take a lot of assumptions. It is surrounded by a lot of assumptions, lot of concepts, lot of ideas, thoughts, without which this accounting is meaningless. Like I told you, we record only business related transactions. It means personal transactions will not be recorded in the books of the business. Like it is the owner who is doing the activities. So whatever expense and income we have for the business, that only will be recorded. There will be no other expense income that will take place in the books of the business. So this is the assumption I am taking, like owner is separate from its business. Only items, only activities which are measurable in terms of money, only those activities will be recorded. Right? No other activity will be recorded. There are so many activities which cannot be measured in terms of money, so that won't find any place in the books of the business. That is money measurement concept. So we have separate entity which says business is different from owner. So only business related transactions will be recorded. No other transactions will be recorded. My personal expense, my personal income won't find any place in the books of the business. Similarly, money measurement. Only activities, items which are measurable in terms of money, only those activities will be recorded in the books of the business. Like the amount of compensation which you are giving to an employee is recorded as salary expense. But think about how loyal your employee is towards the organization. How much skilled he is. He is carrying around about 10 years experience. So the employees, those who are working with you, are your main assets, human assets. So don't you think you should record it as an asset in the balance sheet? No. But what we do, whatever monthly compensation we pay them, that is recorded as an expense. Because there is no such measuring tool to measure my honesty, my integrity, my knowledge, my skill, my talent. So money measurement says Only those activities which you can express in terms of money or money's worth, only such activities will be recorded. Suppose I have provided you a service and you have given me some old asset, and that old asset has no market. It means I cannot ascertain the value of such asset which you have given me. So money measurement says you are unable to ascertain in terms of money, so I won't be able to record it in the books of the business. There is one more concept. Business life is going concern. Year after year, the business will go on for indefinite period. So we need to fix up a time frame that every 12 months we will measure the performance. For every 12 months we will calculate the net profit. So this is the assumption we are taking. So like this, there are so many assumptions, ideas, thoughts. We have prudence, which tells you to anticipate future loss but do not anticipate future gains. So whenever you are doing financial accounting, it is within a framework. So financial accounting, to be very precise, right? When I talk about financial accounting, it works within a framework. Works within framework, like assumptions, concepts, ideas, thoughts, etc. Right? So today we are going to talk about financial statement of US entities. When we do accounting for Indian entities, we have accounting standards issued by Institute of Chartered Accountants of India. If you see globally, most of the countries, they follow IFRS. US, it's US GAAP. So whenever you do any kind of accounting for US based companies, you have to follow US GAAP. First of all, let me just tell you, under financial statement, what all things come. Right? When I talk about financial accounting, it means I am calculating net profit, I am ascertaining net worth, balance sheet. But when I talk about financial statement of US entities, right? If I talk about financial statement of US entities, you have this balance sheet, you have income statement, you have cash flow statement, we have changes in shareholders equity, and we have notes to financial statement. In this notes to financial statement, you have to disclose as to how you have recorded your revenue. What is the revenue recognition policy, or how you have measured your inventory, closing stock. Like you know that closing stock valuation principle is cost or NRV, whichever is lower, or cost or market, whichever is lower. So what policies, what principles you have followed, all those things will be disclosed in this notes to financial statements. So when you talk about financial accounting, it is not only PL and balance sheet. It is not only income statement and balance sheet. It is also extended to cash flow statement. Basically, this is a statement where you try to find out application and source relationship. Suppose I have purchased something. So from where I have got that money? Have I borrowed and purchased, or have I earned and purchased? Right? So in cash flow statement, we always try to find out a relationship between your application and source. This is your shareholders equity. Like you have issued few new equity shares, or you might have bought back some equity shares, repurchased. All those informations will come in your statement of stockholders equity. So when I talk about financial statement of US entities, you have balance sheet, you have income statement, you have cash flow, you have stockholders equity, you have notes to financial statements. Now these financial statements, when you talk about the reporting part, accounting part, okay. Now when you talk about financial accounting and reporting, the subject name is financial accounting and reporting. When I talk about reporting, it means I'm communicating this to someone. So this needs to be communicated to users so that users can satisfy their informational needs, right? So I'm giving these statements to users, right? These users, government, lenders, creditors, investors, current, potential, all, right? And they need this information so that they can take their decisions whether they want to continue their business relationship with us or not. Now whenever you do this, whenever you prepare this for US entities, you have to follow US GAAP. If it was Indian company, accounting standard issued by Institute of Chartered Accountants of India, right? If it is some global country, any entity, it's IFRS or that country's accounting standard. If it is US entities, it is US GAAP. US generally accepted accounting principles, US GAAP. Now who is of the responsibility to frame this US GAAP? The authority to establish US GAAP, US accounting principles, is with SEC, Securities and Exchange Commission. It is SEC who has a responsibility to establish US GAAP. Right? Like in India, it is the Companies Act. It is the Ministry of Corporate Affairs has a responsibility to frame accounting standard for Indian companies who are registered under the Companies Act 2013. So they delegated their work to Institute of Chartered Accountants of India. Similarly, SEC, Securities and Exchange Commission. Like in India, we have SEBI. US, we have SEC, Securities Exchange Act 1934. SEC delegated its responsibility to FASB, Financial Accounting Standard Board. They will frame US GAAP. Like Ministry of Corporate Affairs delegated its responsibility to ICAI. ICAI is framing. SEC delegated to FASB, Financial Accounting Standard Board. It is now FASB who will issue US GAAP. Post 2009, these US GAAP pronouncements are reorganized and named as ASC, Accounting Standard Codification. Accounting Standard Codifications. So US based entities, they will follow US GAAP issued by FASB. And who has delegated them this power? SEC. It is SEC who has delegated them this power to frame US GAAP for US entities. Right? So now whenever you are doing financial statement for Indian companies, you follow guidelines of MCA, Ministry of Corporate Affairs. They have delegated it to ICAI. An accounting standard cannot tell follow me. I cannot tell follow me. It has to be pronounced by someone. Follow guidelines issued by this person. Like in company law, it is mentioned you have to follow accounting standard issued by ICAI. So every country have its own regulations for maintaining and preparing their accounting work. Most of the foreign countries, they have told clearly, we don't have our own accounting standard, let us follow IFRS. It is set up by International Accounting Standard Board. US GAAP pronounced by FASB, known as Accounting Standard Codification. You have some general principles. You have principle related to various assets, expenses, incomes, liabilities. All these things we have in our curriculum. Is it fine? So tell me, US based company will follow US GAAP, pronounced by FASB, known as Accounting Standard Codification. So when I say ASC, it means it's GAAP. When I say GAAP, it means ASC. I think it's okay, right?